What's up, everybody? Welcome to the chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. And today is Monday, May 2nd, 2022. Right now, the stock market is actually having a pretty decent bounce. It's been a wild day. The market, pre-market this morning opened up, or didn't open up, but pre-market this morning, things were green. Then they turned red. They turned red even more once the market opened. And it's looking like we could see a green close. We'll see. The NASDAQ right now is up 109 points, which is a hell of a bounce right here late in the day, the last hour of the day. The Dow is just barely red. We're only down around 0.14%. The S&P is only down 11 cents at this point in time. Oil right now, WTI crude is up 0.5%. And we got earnings today, baby. Earnings season is still rolling. We got a lot of really good names that are reporting on a Monday, nevertheless. Usually Mondays are kind of boring. Okay, let's get the week started, blah, blah, blah. But we actually have some pretty good ones. And so we're going to be covering those today as well. But before we get into any of that, as you guys know, let's go ahead and hit up the starting five. What's up, Savvy Money Show? Good to see you, brother. By the way, Savvy Money Show, I appreciate that every day he comes in here and says to hit the like and subscribe button. I appreciate that. For some reason, though, Savvy, YouTube makes me screen it. I don't know why. They just do. So I have to always approve that comment. It's so weird. Nevertheless, John Gosson, welcome to the starting five. Baker Twoon, Ralph Vandenhoek, and Philip Stroh. You guys are our starting five. Thanks for showing up early. If you guys missed out on the starting five, there's a good chance that maybe you didn't hit the subscribe button and that notification bell. So if you want to get notified every time I go live to cover these earnings, then make sure you're hitting that notification bell to get notified when I go live at 3:45 p.m. Eastern time every day, Monday through Thursday, to cover live earnings reactions. Didn't go live last night. I appreciate you guys being patient with me. I'm working out some things, logistically and all that. So if you guys wouldn't mind continuing to just bear with me on that, things are changing. I'm doing a lot of cool stuff. That requires a lot of my attention. So I appreciate you guys not giving me too much of a hard time on Sundays. I'm actually considering maybe, I don't know, not making Sunday as much of a priority as throughout the week. It just seems like things are shifting within the channel, and I would love to hear you guys' feedback. Does Stock Watch Sunday still make sense to a lot of you guys? And you can comment on this later if you are watching this. But I've just given this a lot of thought. I haven't really talked to anybody about it, so I'm talking to you guys first. Or does it make sense to just be live throughout the week and then maybe do a pre-recorded video on Sunday or what have you? I just, I'm always trying to experiment and throw some things around, but I always like to get your guys' opinions on things too, because you are the ones that are viewing this content and you're the ones that are looking forward to it. So let me know what you guys think about this. Should there be a shift with going live on Sundays? It seems as if attendance has been a lot lower on Sundays than they are during the week. So maybe there's something to that. I definitely want to hear from you guys. Let me know. We have earnings today. We have not Starbucks. We have Starbucks is tomorrow. We have Devon Energy. We also have Mosaic, Avis, which a lot of you guys, I think ticker symbol CAR is also reporting. I don't know if a lot of you guys are interested in that, but I put that in here. Expedia, which is one that I'm personally interested in, specifically because of my position in Airbnb. So I think that that's going to be an exciting one to watch, especially considering how we've seen a lot of the travel related stocks have so much optimism. So Expedia will be reporting earnings. Then we have Diamondback Energy. So last week we ended the week with a lot of the energy stocks reporting. We're going to kind of carry over to Monday to round out or finish out some of the energy stocks that are going to be reporting. I don't expect a lot from Devon Energy or Diamondback, but we'll still watch those nevertheless, especially if you guys are interested in that. Then we have Mgm and Clorox. Now, MGM is definitely going to be one that I think will be worth watching. They're expecting a loss here of 7 cents. If they come in positive, that's going to be significant for the entire gambling industry, the entertainment industry. $2.78 billion in revenue. I think that that's actually setting the bar probably pretty low. Now, they have exposure to Macau to a certain degree too, so that's going to certainly make an impact. But MGM, probably one of the best run casinos in the industry. I mean, their balance sheets are incredible. One of the best balance sheets in the industry as well. So this is the gold standard as far as I'm concerned. It's not Caesars. It's not Wynn Resorts. It's MGM. And this is the one stock that has outperformed all of the other casino stocks. And so I think that I really like this one. This is one I'm certainly looking forward to. Clorox, also an interesting one. They're expecting earnings of 97 cents per share, $1.79 billion in revenue. This is very interesting because Clorox, as you guys might know, or recall, during the pandemic, it was an absolute monster. Shit doubled in like, I don't know, 6 months. And then it took a giant nosedive because supply just ran out. They didn't have supply for Clorox wipes for like 3 months. They just didn't have the materials to make them. And it's really struggled ever since. So this will be interesting to watch. I mean, Clorox was trading up over $220 a share. It's trading at 142 right now. So this is one of those pandemic stocks that did really well through the pandemic, and then after the pandemic, not so much, and really kind of leading into the late innings of the pandemic. It was still officially a pandemic when the stock really started to sell off. So that'll be interesting to watch. The thing about Clorox, though, it's not just wipes and bleach. They own so many brands. They own Kingsford. They own the Hefty, the trash bags. They own so many names that it's not just one specific area, even though everybody knows them for bleach and, wipes and that sort of thing, and disinfectant. So, I think that Clorox is certainly one to watch out for. It's one of those staple companies that in an environment like this, you would expect to do well, but supply chain has certainly hit them too. So those are going to be ones to watch. Definitely want to hear from you guys. What are your favorite earnings that you're looking at today? Do you have any that you care about? There's a couple of other ones. Chegg, that I somehow lost, was also a major player in the pandemic as it related to online learning, specifically with colleges. And that stock did extremely well and has also been kind of like a victim of its own success as a result of the pandemic. So a lot of these pandemic plays have really gotten hammered, and Chegg was definitely one of them. They're estimated around 24 cents per share, $201.28 million. So not a giant company, but we'll see what they come in at. And it's been up and down as far as those earnings are concerned. I like this. Avis says 57 people in the chat as they're starting to roll in, only 7 likes. Let's show some love. I appreciate that. Hit that thumbs up, guys, if you're looking forward to these earnings this afternoon. All right. Who's holding Airbnb calls? Your boy right here, big guy. I got Airbnb calls, and let's take a look at Expedia right now. So the markets are really starting to rip up, specifically in growth and in tech. Let's take a look at Expedia as those earnings are going to be this afternoon when the market closes. Oh, this is interesting. Didn't know that. Don says, what's up, Don? Ford started Kingsford, taking their trash and turning it into coals. I had no idea. That is a fun fact. I appreciate that. I need more of those. Give me some more fun facts, people. I did not know that at all, but that is very interesting. Okay, so Expedia was red this morning, and really for most of the day, just started to turn green here as we're going into earnings. Look at this move up. I mean, look at even Sam. Boston Beer Company's up 4%. I mean, the S&P ripping up right now too. Very interesting. Now, I put out a tweet earlier today that I expected the S&P to absolutely rip on Wednesday. And you can see here. Let's take a look here. So this is a tweet that I put out. Please go follow me at On the Chaos if you don't do so already. I think we're going to hear from the Fed. If the Fed gives us exactly what we're expecting, which I think that they do, I think we see a 0.5 point rate hike. And if the tone actually starts to turn dovish, especially as we get some of the CPI numbers and inflation data coming in, and things seem to be peaking as the market has corrected significantly, I would imagine that we could see a potential rip up in the SPY. Now, this is me being 100% speculative. I don't want anybody to take this as gospel, but it seems as if we could be in a very strong situation in which people are selling the rumor and buying the news. We hear the opposite a lot, right? That's a very common term. Buy the rumor, sell the news. And I think that in this situation where we're seeing the S&P hit a new year-to-date low intraday, that we could see a positive move here after those comments from the Feds. The Fed meetings on Wednesday, we'll hear from them. And so I don't know. I just think that we could see a pretty decent bounce, especially as I think a lot of this could be priced in. A lot of it. There's your macro perspective for the day. But getting back to Expedia, as I had mentioned, stock is now turning green. Let's go back to the 5-minute chart here, just to kind of give you a visual of what how the day's been turning out. Pretty wild stuff. Not anywhere near the high of the day, which was at 178 towards the beginning of the day, but we're getting there. And this will be very interesting. As I'd mentioned before, travel demand has been on absolute fire. Their expected earnings per share are a loss of 64 cents, and the average estimate for revenue is 2.23 billion. So much smaller than that of an Airbnb or a Booking, but this could give us an idea of what we could expect from Booking and Airbnb. And honestly, I think that the hint that was given to us was from the airlines. You had Ed Bastian from Delta. You had the CEO of United Airlines, or United, talk about how they're seeing demand, record demand and revenue like they haven't seen in 30 years. And so I think that that's going to directly translate into things like entertainment and travel and vacation spots. We've talked about this before, and it's so funny that we're finally hearing about it. I just heard it on CNBC this morning. People talking about how, or investors talking about how we're not seeing a change in demand. We're just seeing a change in where demand is going. So consumer demand is very strong. People are still buying clothes. People are still going on vacation. People just aren't buying Netflix subscriptions anymore. People aren't paying for Zoom like they were paying for. You know, some of the pandemic type plays that did really well, and Clorox is very much in that category, right? I mean, consumer spending just isn't a blanket statement anymore. It's very specific in hospitality, in travel, in vacations, in airlines. We're seeing that's where the money is going. And so I still think that we're in a very strong economy. And for that reason, that is why I am bullish on Airbnb. And I think that we could see some excitement carry over to Airbnb and Marriott. You guys can see this on my screen as well. Marriott also one that's going to be a benefactor of this. So this would be very interesting to see Expedia's earnings and kind of see how this translates into some of the other travel related stocks. If you guys recall, last week I talked about how Google mentioned that they saw a significant increase in search volume when it comes to travel. The search volume for passports and that sort of thing doubled, not just compared to last quarter, but it doubled compared to the first quarter of 2019. The first quarter of 2019, it doubled. So that is a very interesting comparison. So that's why I think that this is going to be very exciting, and why I think that I'm going to continue to stick with my Airbnb trade. But couple other things to note here as we head into the close. We got about 2.5 minutes before we start seeing these earnings results pop in. You can see Netflix has had a monster move here. The stock's up 5% as they laid off some people. CrowdStrike back, making a move back up as well. So some of these are making some pretty solid move. And then there's Facebook. You guys remember how long I've been talking about how Facebook has been undervalued, right? Stock's up 5, almost 6%. It's up 30% nearly from its 169 lows. And it might be over 30% now. We're set to close over to the 50-day moving average on Facebook for the first time since January of this year. The first time to close over the 50-day moving average since January. And I think that that's significant. I don't think that should be overlooked. So, you know, I think a lot of the big tech names, Microsoft, Facebook, Apple, maybe with the exception of Netflix, could start to see a strong turnaround. Just because of how much they've come down. And Alphabet certainly in that conversation. Alphabet, this is a stock that just announced a $70 billion buyback that's trading at 20 times next year's earnings. I mean, there's so much to talk about here, but I think that these are all worth looking at through the eyes of a bull and not a bear at this point. Now, I will say that I might have been a little bit too bullish. You know, I said that there was going to be some treacherousness in 2021, but I think I waved the bull flag a little bit too early. And listen, we all make mistakes. I mean, the stock market had come down so far in February, it came down 14%, that it seemed as if the bounce was inevitable, and it kind of looked that way in March. We saw a huge bounce, and then we saw another 10% correction in April. So it's been the worst start to the S&P 500 since the S&P 500's inception back in 1945. Isn't that crazy? January to April, the worst start that the S&P 500 has ever seen. So I think the bounce here could be extraordinary, especially given how good the economy is doing right now. A lot of this is going to weigh on the Fed, though, and that we'll see how that happens, how that shakes out on Wednesday. Okay. check it in here. The market's about to close. Let's go ahead and pull up. What's the first one I want to pull up here? I think we'll stick with Avis. Oh, not Avis, Expedia. I was looking at Avis and I said, I just said it. Let's go ahead and pull up that chart right now. And you guys let me know when you start to see any news. Devon Energy also, as I'd mentioned, has earnings. Let's take a look to see if that's moving from there so far. MGM. And what a move on MGM late in the day. Close the day up 3%. What a monster. Clorox. Let's see if Clorox has any movement. Nope. There's Diamondback Energy. It's starting to move a little bit, but on no volume. Okay, Avis. Oh, Avis is skyrocketing. Okay, here we go. Here we go, people. Let's pull up Avis. Stock's now trading up 7% after hours. It looks like, oh, and it's still rolling. Look at this. Now up 10%. Holy cow. Stock's now trading up 8%, as high as 10% here after hours. What a move on Avis. Looks like those numbers came in and people are loving that. So here are the numbers. The expectations for Avis were, the numbers were $3.45 was the expectation. $2.1 billion in revenue was also the expectation there. And let's see. They came in at $2.4 billion in revenue. So 2.1, as I mentioned, was the expectation. They came in at 2.4. So a solid beat on revenue as the stock is now pulling back here after a 10% spike, now only trading around 5% up after the close. Still a pretty decent move. Trying to find earnings per share here. I have the actual report. Let's take a look. Some interesting notes here. We ended the quarter with revenues. This is from Avis, 77% above the first quarter of 2021 at $2.4 billion. This is very interesting because remember what we heard from CarMax and some of the other used car, and Vroom, some of the other ones. They actually did very poorly. This is actually great news that Avis has done really well. And I'm not just talking about CarMax. Avis is a little bit more of an apples to oranges comparison, but you compare it to something like Hertz, for example, still not anywhere near what Hertz was doing. This is actually an impressive quarter. Again, $2.4 billion in revenue. The expectation was 2.1. Net income was $527 million, and the adjusted EBITDA was $810 million. For our best first quarter, according to Avis, adjusted EBITDA in our history. So for the best one. Best quarter in their history there. Utilization for the quarter was 67.4% and in line with the first quarter of 2021, showing our fleet is well positioned to meet seasonal peak demand, which is very important considering what I had just told you guys about travel. Looks like Avis may be poised to do really well. No issues there. Still looking to try to find, they didn't report in that what their actual earnings per share were. Here we go. Adjusted earnings per share, $9.99. The expectation, what did I say? 326. Holy shit balls. That is wild. Guys, I mean, I know we got other stocks to cover here, but I can't understate the massive beat that Avis just had on their earnings. Wow. $9.99 versus the $3.26 estimate. They came in $300 million above the expected revenue. This is massive. It's a massive beat. And I think that this shouldn't be understated. This stock's going higher. It's up 10%. I think it's going to open up higher than this. Let's take a look at the daily chart right now. This is an amazing beat. So it's sitting at 305 right now. 329 was a recent high that we saw back in April of this year, which tested another high that we saw back in November of last year. And obviously it struggled and had a really tough time. But those earnings, ladies and gents, is exactly why I'm a huge fan of travel stocks right now. That's wild. And let's be clear. there's still parts of this country that you can't rent a car because of COVID. I mean, that is crazy. Absolutely crazy. Some other reports are saying 971, so maybe that's the adjusted 971, but still a massive beat for Avis. Holy cow. Let's go back to the 5-minute chart here. The stock's now trading up 12.28%. Unbelievable. Wow. That is a wild, absolutely wild move. Okay, let's go look at some of the other ones. Expedia is up 5%. I'm sorry I spent a lot of time on that. I was just blown away by those numbers. Absolutely insane. Expedia came in $2.25, looks like, was the, I'm sorry, 2.25 billion. So they came in line on revenue. They came in at 47 cents was the loss per share. The expected was 43. So they came in and missed earnings as far as earnings per share were concerned. Looks like Savvy says some of the numbers he's getting 2.25 billion versus the 2.23. Looks like there's discrepancy there, but basically coming in line on revenue, and then Expedia coming in and coming and missing a little bit on earnings. A loss per share 47 cents. So I'd imagine the reason why this is moving here after hours is probably because of some sort of outlook that hasn't quite yet been reported. So yes, these are the official numbers here. Adjusted earnings per share, a loss of 47 cents. The expectation was a loss of 43. It came in at 2.25 billion. The estimate was 2.25 billion. Gross bookings, 24.21 billion versus the 24.53 billion expected. So kind of a miss all the way around. Trying to figure out why the stock is actually moving up here, and I have to imagine it has everything to do with the outlook, what they're expecting here for the rest of the year. Stock is actually moving up now, looking pretty solid, around 5% up here after hours. Pretty decent move, despite missing on earnings. Wow, pretty crazy stuff. So two huge moves here. Expedia is continuing to move up. Now it's up nearly 6.5% after hours. Oh my goodness. I'll come back to you guys on that to see where exactly and why exactly that's moving. If you guys are just tuning in, there's 139 of you guys hanging out here. Certainly appreciate you. If you guys would hit that subscribe button, hit that notification bell if you guys want to continue to show support for the channel. But I reported Avis came in and absolutely smashed earnings, absolutely crushed it. $9.71. That was the estimate, or it was the actual. The estimate was like $3 and some change. So smashed earnings and then beat revenue expectations by $300 million. Wild move on Avis. Let's take a look at that stock again. CAR is the ticker. 13.31%. Still absolutely crushing it here after hours. And then followed up by Expedia, that came in and missed expectations, but for some reason the stock's still trading up nicely here, and no real reason as to why just yet. My hunch is that it has everything to do with that potential outlook, and especially for the upcoming travel season. So some good news here. Let's take a look at some of the other ones. Chegg, one of the pandemic winners here, is down now 19%. This isn't too much of a shock to me. I was going to watch it today just to see how it was doing. Not doing well at all. They beat revenue. They beat estimated earnings per share. They beat by 8 cents. They came in at 32 cents per share. If you guys recall, I had said 24 cents was the estimate, but they missed revenue. $202 million was the expected revenue. 201.28. So that's not really great. And so the stock is actually selling off here after hours. It's now down 20%. Not really much of a shock there. Not really much of a shock to Chegg. Unfortunately, I would imagine this has a lot to do with their outlook as well. I can't imagine that they're actually going to do well in an environment where we're seeing a lot of people get out of the house. Unfortunately, look at the daily chart on this. I mean, what a fall from grace this was. This was trading at $115 a year ago, a little over a year ago. It was trading $115 and now has sold off here in the after hours market to trade at just $19. Wow. That's crazy. 52-week lows here for Chegg. That sucks for anybody who is a holder or a believer in Chegg. Man, that's terrible. All right, just checking in on Clorox here. Let's go back to the 5-minute chart so you guys can see the action here. Looks like that's starting to gap up a little bit. There might be some earnings here. 1.5% is where it's trading at, up. Sorry, let me rephrase. It's up 1.5% here after hours. Clorox, if you guys recall, I was talking about this quite a bit here before the market closed. Looks like those earnings are out. Okay. Looks like earnings per share $3.60. Sorry, their guidance is 360 to 385. So it looks like their guidance came in below expectations. The expectation there for sales was $3.80 to 405 on earnings. So it looks like they came in below expectations as far as that's concerned. I'm trying to find the actual earnings per share here real quick for you all. Still nothing. Still nothing. Oh, here we go. Let me see if I can find it here. So net sales increased 2% to 1.8 billion compared to flat sales a year ago. According net sales growth reflects higher shipments across reportable segments. This isn't too much of a surprise. So it looks as if revenue came in, or net sales, meaning when you take out all expenses and everything else, came in kind of flat. They were up 2%, but really not all that big of a deal. They grew overall market share, including third straight quarter of double-digit gains for Clorox disinfecting wipes. Not much of a surprise there. Continued to execute cost-justified pricing actions across the vast majority of the portfolio, which we talked about. Kingsford and some of the other big brands, Hefty, various brands of cleaning products. So that is also interesting, and the stock is now selling off. It's down 3%. Just fell right off the chart. Let's see here. So yeah, there it is. It's down 3%. Clorox not having a great afternoon here, coming in line basically on earnings and not really giving much of an outlook, and actually coming in below expectations on that outlook. So not a really strong outing for Clorox, but it's a great company still. I mean, long term, if you want something that's not going to be super volatile, this is a great stock. In the short term, though, might not be great. Devon did report earnings, I think. I'll pull those up. Stock is flat here. It looks like they had some movement, but I thought, by the way, I love this name, Stop Console Wars. Okay, how about are these earnings going to be? Did Devon report already? That's the only one I'm confident in hearing good news. Obviously, the energy sector has done really well for the last 2 years at this point. DVN is the ticker symbol there for Devon Energy. A lot of the energy stocks have been absolutely crushing it. They did beat earnings expectations, it looks like. So the expectation was $1.75. They came in with an actual of $1.88, so they beat by 12 cents. Revenue came in at 3.81 billion. The expectation there was 3.81 billion. So they came in line on revenue, but actually beat expectations as far as earnings per share. The stock hasn't really been all that reactive. It's only up about 0.5%. So no big deal there. The other energy company that was reporting today was none other than Diamondback Energy. If you guys probably seen that one quite a bit here. The ticker symbol is FANG for Diamondback Energy, and not really a whole lot of movement there either. But I'll see if those numbers are out. Revenue came in at 2.40 billion versus 1.94 billion. So that's actually a pretty solid beat there as far as revenue is concerned. Nothing on earnings per share just yet. As soon as I get that number, I will certainly pass it along to you. Here we go. $5.20. The consensus, as I mentioned before, was $4.76. So pretty decent beat. Stock isn't trading all that great, though. It's only up around 0.39%. So not really like a shell shocker, right? Nobody was, I guess, blown away by those numbers on both of the energy companies that reported. That's Devon Energy and Diamondback Energy. Neither one of these actually blew anybody's doors off, but they came in and did pretty good on earnings nevertheless. Mosaic. It came in at 1.453. Let's take a look at that ticker symbol. So MOS for Mosaic. And, this is one that I thought was interesting, especially given the climate that we're in agriculture. Stock's actually trading down 5%. So they came in line on earnings per share. $2.41 was the expectation. And that's what they came in at. 4.08 billion was the expectation for revenue. They came in at 3.9 billion. So they missed on revenue. This is very surprising. I thought for sure that they would have been able to crush it considering the revenue in this space, but they came in and actually missed on earnings there. Finally, there's MGM. It's the only one we haven't covered yet today. MGM's down 4.33%. Ooh, this isn't good. The expected revenue for MGM was a loss of 7 cents. Pulling up the expected or the actual earnings right now on MGM. I have the report pulled up here. Let's take a look and see some of these numbers. I think a lot of this might have to do with Macau, their exposure to Macau, why this might be selling off. This could potentially be an opportunity as I see some of the earnings numbers that come in here. So some of the highlights: Las Vegas Strip Resorts and Regional Operational Adjusted Property increased 47% and 48% respectively. Oh my God, that's a huge move. And this is compared to 2019, guys. So this is not just compared to last year. This is compared to 2019. That is wild. They announced an offer to acquire global online gaming company Leo Vegas for a total tender value of approximately $607 million. That's probably why it's selling off, or it was. Now it's back to the green here. They repurchased $2.8 billion worth of shares in stock. They closed a transaction with MGP to VICI and continue to pursue a commercial gaming license in New York and development of integrated resorts in Osaka, Japan. So I'm not a big fan of anybody going after New York right now. Obviously, it's a huge market share, but the amount that New York is taxing these gaming companies is absolutely atrocious. Consolidated net revenues of 2.9 billion compared to 1.6 billion. This is a fantastic quarter, guys. I don't know why it started to sell off in the beginning, but these are looking like some really solid numbers, especially on stateside. Like I said, net revenues of 1.7 billion in the current quarter compared to 545 million in the prior year quarter, an increase of 205%. The current quarter benefited from an inclusion of Aria and was negatively affected by a decrease in business volume and travel due to spread of Omicron variant in the early part of the quarter. However, prior year quarter was negatively affected by midweek property and hotel closures in certain properties. As you guys recall, 2021, the beginning of 2021 was awful, and Delta wreaked havoc on MGM summer last year. So these are actually really great numbers. I would be a buyer of MGM right here. This should bode well for some of the other gaming companies as well. They came in adjusted loss of 1 cent per share. If you guys recall, I had mentioned that they were expected to come in much lower than that. So they were expected a loss of 7 cents. So they came in a loss of 1 cent. So pretty significant beat there on earnings per share. As I'd mentioned, net revenue 2.85 billion versus the 2.8 that was expected. So actually a really good quarter for MGM and a really good quarter for gaming. I mean, this should bode well for casinos in general. Let me check out, see how some of the other ones are reacting. Wynn Resorts, non-reactionary. Caesars, which reports tomorrow, no reaction there either. And slightly down after hours after having a 3% day. Pretty decent day for Penn National. But MGM trading in the green here now after hours. So guys, just to recap here, we covered a lot of earnings this afternoon already for a Monday afternoon. That's pretty busy. So Devon Energy came in line on revenue and really not really all that shocking. Not too much movement there. Fang, that is FANG, not to be confused with the tech conglomerate. Diamondback Energy came in and beat earnings, did pretty well. And that stock's not really reacting all that well either, only because it came in pretty much as investors were expecting it. One of the big winners was Avis. The stock's now up 11.2% on an absolutely monstrous beat. This might be the beat of the quarter for earnings season, guys. $9.71 was the actual earnings per share. The expectation was $3 and some change. And actually, I can confirm that. Hold on. Let me just double check here. The expectation for Avis, $3.45 was the expectation. They came in at $9.71. 200% higher than what the expectation was on earnings per share. Then they came in on revenue and also knocked it out of the park. They came in with an expectation of $2.1 billion. They came in at $2.4 billion. Another massive beat on revenue. I mean, they weren't expecting this type of quarter until next quarter. This is just wild, guys. I mean, Avis is knocking it out of the park here. Really crazy. Then another solid beat from earnings this afternoon. Expedia, well, Expedia came in line. They didn't really blow anybody's socks off. So stock is up 6% though. This has to do with the outlook here. And let me actually double check. I did not get the NXP yet. I will get the NXP. I did forget about that one. So I will definitely recap NXP. I'm just trying to double check to see what's going on with Expedia here. So just to recap the numbers, Expedia missed. Revenue came in at $2.25 billion versus the $2.727 billion that was expected. They came in at a loss of 78 cents versus a loss of 27 cents that was expected. The stock's still up. This is just another textbook, reaction. People want to know why stocks move in opposite directions that you would think on earnings. They came in and actually missed earnings pretty badly on the quarter, yet the stock is up 6%. Why? Well, total gross bookings were $24.4 billion, which is a 58% year-over-year increase. And this is compared to 2019. I'm sorry, they're down 17% compared to 2019. This is year-over-year, was a 58% increase. So this is the smallest quarterly decline since the start of the pandemic. So while they missed earnings, those are actually pretty decent numbers considering they didn't miss as badly, I guess, as they had in the past since the pandemic had started. I'm still optimistic on what Airbnb has to share. If Airbnb moves like this, or I should say if Expedia is moving like this, I would expect Airbnb to have a much stronger move as a result. Let me go ahead and see if Airbnb is actually reacting to this. They are a little bit, actually. The stock's up 1.5%. BKNG or Booking Holdings, the other travel related stock, that's also up 1.25%. So they're all kind of reacting. And I'm with you here. Karem Bastanchi, I think that's how you pronounce that. Let me know if I butchered your name. I apologize if I did. Said anything related to travel is a buy. We've been talking about that. And, I think that. I would agree with that. I think anything travel related is still going to do extremely well. NXPI at earnings, they're up at 1.4%. They came in and beat earnings by 17 cents. $2.48 was the actual earnings per share. They came in with the expectation was I'm sorry. Is this beat? No, those can't be the right numbers. Let me just reconfirm. Sometimes you think you have a reliable source and then it gives you something wonky. So they came in, the expectation was 317. I don't know why anybody's saying they beat. 248 was the actual. That's interesting. Okay. So it looks like they came in. This is why I hate seeking alpha. So it looks like they missed on earnings per share. $2.48 versus the $3.19 that was expected. They came in above expectations on revenue though. $3.14 billion versus the $3.1 that was expected. Guidance for Q2 2022 revenue was 3.175 to 3.375 versus the $3.15 billion estimate. So they actually came in above guidance expectations, and that's probably why the stock is slightly in the green here after hours. So they missed on earnings, they beat on revenue, and then raised their guidance, and or came in above expectations on guidance anyway. So that's why the stock is up this morning. Okay. Thanks so much for hanging out, guys. Some really good earnings. you know, nothing really that shit the bed, to be honest with you, except for Chegg. I mean, is anybody really all that surprised about Chegg? Those poor guys. Chegg is now down 25%. Oh my God, that's so awful. On poor guidance. This is really why the stock is trading off. Tuan Lee says Avis is jumping 12%. Yes, it actually is because they crushed earnings. This is the most impressive earnings that I think I've seen this season so far. It's up 12.5% or 12 and a third, I should say, on expectations. They expected a $3.45 earnings per share. They actually came in at $9.71 and then beat revenue expectations by $300 million. I mean, what an unbelievable beat. And I would imagine the stock's sitting at $315 after closing the day at 280. I mean, it was already up 5% on the day going into the close. It's now up another 12% from there. And I think it goes even higher tomorrow. Stock could see a resistance here. Well, it's already blown past the $300 resistance. And if it maintains that going into tomorrow's open, I'm sure it'll probably open above that resistance at $300. We'll say 302 to be exact. 330 is going to be the next area that we're going to need to see this beat. And I would be surprised if it didn't do that. It's trading at 314 right now. So we still have a lot more room for this to run on a massive, massive beat. I mean, this is unbelievable. Yeah, me too, Egris. Egris says, I wish I hit up Avis. Yeah, I mean, it's just absolutely incredible. What a move. And this is certainly on the table, right? The Feds will cause a lower overall drop, and Avis isn't going to be immune to this. I think we could see this impacted by that. But my hunch is on the Fed is that we're actually going to see a pretty decent bump in the overall market because of how poor the expectation actually is. And I agree with this. I think that followed us up by saying it'll flip after June, July. I think it could flip as early as Wednesday. The Fed meeting's on Wednesday. There's a lot of expectations for bad news. And let's go back to the 5-minute chart just so everybody can see this giant boner candle on Avis. We're expecting a lot of bad news from the Fed. So if you're expecting a lot of bad news and to deliver on that bad news, and it's not any worse than what we were expecting it to be, we can actually see a pretty decent rally going into Wednesday's close. So be on the lookout for that. We see it all the time. You know, Warren Buffett had his annual meeting last weekend, this past weekend, and bought up a shit ton of stuff. I'm going to cover that later in the week on my thoughts on that. And so, he always preaches about buying when everybody is fearful. And it sure seems like everybody's fearful right now. So I think that there's something to be said for that. Snookeroo, I appreciate you, brother. Another awesome show. Thanks for all you do. Absolutely. I appreciate that. If you guys enjoyed the show too, make sure you hit that thumbs up. I certainly would appreciate it. And I'll be back here tomorrow. Tomorrow's earnings are actually going to be super important. We have so many to cover. We got AMD, we have Airbnb, we have Starbucks, Skyworks, Lyft, Match Group, as well as Caesars. Tomorrow morning, we got Pfizer, BP, Marathon, Hilton, Teva, Biogen, Estee Lauder. A lot of really good earnings that are coming up tomorrow too, guys. We are in the thick of earnings season still. So make sure you guys are hitting that subscribe button and the notification bell, as I'll be live again to do it all over tomorrow afternoon at 3:45 p.m. Eastern time. And I can't wait to see you guys tomorrow. This is going to be another great week. So far, this is pretty exciting. This is what gets me excited about the market overall and why I'm so bullish on it. And I think that there's it's right there in writing. I mean, these earnings are fantastic, especially coming from something like Avis. Are you kidding me? I mean, this is where the money's going. It's going in the travel. Consumer demand is still ridiculously strong. Go buy some credit card companies, go buy Target, Walmart, whatever, and then buy some of these travel stocks. The airlines, even the cruises at this point, Avis is just an absolute monster. I mean, my goodness, guys. I feel really good about the economy. I feel really good about the U.S. economy in general. So while the Fed can be scary and we don't want to fight the Fed, I think there's a lot to be excited about here. So let me know what your guys' thoughts are in the comments below if you're watching this later. And like I said, I'll see you all tomorrow. Mañana. Bye.